Hello, what is going on everyone? Welcome back. In this video, I'm going to be performing a top-down multi-time frame analysis on US30. So if you all recall, when I previously updated you guys, from a monthly perspective, when the market was here, I explained all the reasons why I expected this to be a lower high formation when we were testing this level of supply because we had broken monthly structure to the downside with this bearish impulse. And I perceived the bullish move to be nothing but a retracement, and we were going to see a continuation to the downside. And the market, as you can see, has played out perfectly according to my projection. Then, if you go down to the 4-hour time frame, last week, I explained to you guys all the reasons why I was looking for shorts from the psychological level of 34k with this micro 4-hour accumulation manipulation distribution pattern. And again, that's played out exactly according to my projection. So I'm just going to clean my charts and we are just going to have a look at this from a top down perspective. So we've got that beautiful wedge here. Why am I redrawing this one in? Because the market is targeting the sell side liquidity below each of these swing lows, right? We've been targeting the buy side for the considerable part of this year. We've been bullish. We've been bullish, but it's been nothing but a bullish retracement. We formed the lower high from a monthly perspective, okay? We formed the lower high from a monthly perspective, and I'm still expecting a lower low. Take our fib from the low to the high of the monthly corrective move. Sorry, from the high to the low of the monthly corrective move. 27k is my monthly downside target, which as you can see fits nicely with this area of structure. Simply previous resistance, broke to the upside, turned support. So this is my downside target from a monthly perspective. Nothing has changed there. So if we now have a look from, before we drop down, let's just quickly look at how the monthly candle has closed, right? The monthly candle has closed bearish again with a nice wick to fill. However, we are testing this monthly demand and we have seen 3 consecutive bearish months. We could easily see a small retracement before we see lower prices. With that being said, we go down to the 3-day time frame. From a 3-day perspective, we have a bearish impulse from point A to point B. This bearish impulsive move has started to provide us with a retracement. If we want to measure the retracement, we take our Fibonacci from the high to the low. We can see we have the 0.618 here. Not only do we have the 0.618, but if we just place on this, we have an area of fair value from that wick high to that wick low. So we have a zone of confluence. We have the 0.618 and an area of imbalance. Now, if we drop down to the daily time frame, okay, and we can see what we can, let's have a look at what we can see. So from a daily perspective, we have a market which is testing this supply zone. We have an impulsive move, we have a retracement move. However, if you have a look at this retracement move, you can see that this bullish candle is bigger than the previous candle. It's an engulfing candle. So that indicates that this corrective move might see some strength, right? What we also have, if we just quickly go back to the weekly, we have the high of the previous week, previous week's high, exactly here. We have the previous week's low exactly here, which is where we expect the next candles to fill in the wick, right? So what I'm looking for here, if we go to the 4-hour time frame, from a 4-hourly perspective, we have that imbalance, right? That's a 3-day fair value gap, okay? Not only that, but here we have swing high, swing low, sweep, break back below. That means this area right here becomes a breaker, which is resistance. Okay, so not only do we have the 0.618, we have a fair value gap from a 3-day perspective, and we have a breaker. So we have a massive zone of confluence here. Again, if we take our fib from the high to the low, look how perfectly to a fucking T, the 0.618 fits perfectly at that breaker candle, which in fact is an M formation neckline. The market likes to complete these harmonic patterns at the neckline. So basically, what I'm looking for here, from a 4-hourly perspective, I'm looking for price to come up into this zone, take out all of the stops above the previous week high, Take out all of the stops above the previous week high from traders that are shorting this daily supply zone. Once the seller's liquidity has been taken, so once all of the sellers have been removed from the market with this push to the upside, we are going to be monitoring this area right here for potential shorts. Okay, so that's pretty much it. Remember, the monthly, weekly, daily, 4 hourly timeframes are the best timeframes for the direction of the market. Okay, but the lower timeframes are the best timeframes to get a precise entry with as little drawdown as possible. So that's my higher time frame projection. Obviously, price is here right now, and we're expecting it to get attracted into this zone right here. Okay, so can we potentially look for a long until we can reposition ourselves short? Well, let's have a look at the lower time frames. Let's have a look at the lower time frames. So we're expecting price to take out that previous week high. Now you can see by my annotations what I'm looking for here. From an intraday perspective, the market is consolidating in the form of this wedge. If you follow my channel, you will know how we use these wedges over and over again as inducement patterns. What do I mean by that? I mean institutional traders, the market maker, creates these patterns to create enough liquidity where the institutional traders' orders are so they get filled. Institutional traders can't simply press buy and sell like we can. They need to generate the liquidity in order for their orders, their huge orders, to get filled, right? So as I was saying, the market's consolidating in the wedge. We have the previous day low at the low of the wedge, and we have the previous day high at the high of the wedge. If price breaks to the downside, this is going to induce a huge amount of sellers. Why? Because we are testing, as I said already, this area of daily supply, and this is where traders are already going to be positioned themselves short, right? So if we break the wedge to the downside, traders will trade the breakout of the wedge, and this will create a huge amount of liquidity above. And remember, based on everything that I've just said on the lower time, on the higher time frames, we're expecting the market to come up into this level before we can look for shorts, right? So if the market breaks the wedge to the downside, comes into the previous day low, this is where I will be looking for potential longs to target the high of the previous week. And then obviously, this is where I want to reposition myself short, should the market follow my projection. Just going to make this a little bit smaller, and we are going to leave the video there. Don't forget to like and comment, and please feel free to join our Telegram group, our free Telegram group. The link is in our bio. I hope you enjoyed the video, guys. Remember, we need to see confirmation entries only. Take care.